Hello everyone and welcome to Chapter 3 for Payroll Accounting. In this presentation we are going to walk through the PowerPoint, which will begin with the information that's located in page 82 in your book. The first learning objective is analyzing the minimum wage pay for non-exempt workers. Now, as you know, FLASA protects non-exempt workers in two ways, for overtime and minimum wage. There's two exceptions to this, which constitutes if the firm does not engage in interstate commerce or if the firm has less than $500,000 in annual business volume. Exceptions to the minimum wage policies that certain types of businesses are covered, which are some examples are hospitals, schools at any age level, government agencies, domestic workers, which would be chauffeurs and nannies, and subject to FLASA minimum wage if they cannot earn more than $1,700 per year. And this is covered on page 84 in your book. Now, if you turn to page 85 in your book, this is the minimum wage map, which is very interesting to review in regards to the United States and states with a minimum wage higher than the federal minimum wage, states with the minimum wage rates with the same as the federal, which would be the state of Wisconsin. As it states in your book, the minimum wage in the state of Wisconsin is $7.25. States with no minimum wage law, which federal minimum wage rates do apply, is mostly in the southern states by Louisiana, Alabama, and Georgia. And this is on page 85 in your book. It's very interesting to see all the states located and where they are at. States with higher than the federal minimum wage, which is that $7.25. As you notice, a bulk of it is in the West Coast. The cost of living is a lot more. And surprisingly, the state of Minnesota and the state of Illinois also do have higher minimum wages than the federal wage. Some of the minimum wage examples, this would be, in this example here, there's an employee in Wyoming with a minimum wage of $5.15 per hour. Now, this employee has worked 40 hours in 1 week. So 40 hours times $5.15, she would receive $206 for 40 hours of work. Another example is that Chris is a minimum wage worker in Washington, D.C. In Washington, D.C., the minimum wage is $9.50 per hour. This person works 75 hours in a 2-week period. So 75 hours times the rate of pay, he would earn $712.50 for 75 hours worked at the prevailing minimum wage in Washington, D.C. Now, tipped employees, which is covered on page 84 and 85 also. Tipped employees are a little bit different. Is that FLASA minimum wage for tipped employees, which would be like waitresses, is $2.13 per hour. All tips collected are the property of the employee. The employer is prohibited from using tips for any other purpose except for the employee's compensation or multiple employee tip pool. Now, the tip credit that is discussed in this slide is located on the bottom of page 85. It's where tipped employees must earn enough tips to meet the federal minimum wage of $7.25 per hour. If the employee earns less than the wages than the minimum wage per hour, then the employer must pay the tip credit. Okay, not all states are permitted a tip credit. Some states pay tipped employees the FLASA minimum wage. So it really does depend on the state that the employee works in. When you're looking through chapter 3, this is located on page 86 and page 87 in your book. Now, an example of this is that this tipped employee works in Missouri and earns a minimum tipped wage. During the 40-hour work week, she earned $240 in tips. Does the employer owe her a tip credit? The Missouri Minimum wage tipped is $3.0825 per hour. Gross wages, multiply that by 40 hours, her gross wage would be $153. Gross wage plus the tips, in this case, would be $393. The minimum wage for Missouri is $7.65 per hour. So if you take the minimum wage, $7.65, multiply it by 40, the gross pay is $306 if they were paid at the minimum wage. The employer does not owe the employee a tip credit because they earned above the minimum wage, gross wage for the 40-hour work week. Now, in example 2, we are working in the state of Connecticut. Does the employer owe him a tip credit? So in this case, the tipped wage is $3 per hour, multiplied by 40 hours is $120. So tips plus $60, that's the amount of tips that they earn, is $180. The Connecticut minimum wage is $9.15 per hour. Gross pay, so you take the 40 hours, multiplying it by the minimum wage of $9.15 is $366. In this example here, the employee earned less than the minimum wage for the 40-hour work week, so Jerry's employer must pay him a tip credit of $186. So it's a $366 minus what the employee earned in tips, and the tip wage would be the $186 in a tip credit. The other items that we're going to talk about in this example here is a gross pay compensation for different bases. And this is covered on page 88 and 89 in your book. Plaza's minimum wage salary is $4.55 per week. Overtime eligibility for an employee is determined by the company. By law, only federal salaried employees must receive overtime pay. So we need to determine if hourly rate for a salary non-exempt workers. In this first example, we have a salary non-exempt employee was earning $1,200 per week for a standard 45-hour work week. So $1,200 divided by the number of hours they worked is $26.67 per hour. The overtime rate would be, remember that when you calculate overtime, is $26.67 times rate and a half, so 1.5 equals $40 per hour. If the employee worked 50 hours in one work week, it would be the $1,200, which is their salary, plus the overtime pay of, in this case, is $200, would equal $1,400 of their gross pay. Remember, this is salary non-exempt because they are a non-exempt employee. The other item that we're going to go through is computing. Another example is hourly depends on the number of standard hours per year. An example would be 40 hours multiplied by 52 weeks. So the average, most employees work 2,080 hours per year. An example would be 37.5 hours per week. 37.5 hours multiplied by 52 weeks in a year, they would work 1,950 hours per year. This is covered on page 89 in your book. So depending on how many hours they are scheduled to work in the work week for the employer, you multiply it by 52 weeks in a year. Hourly rate for salary employees is the annual amount divided by the number of hours per year. So in a large number of the hours of the work week means that the hourly rate is lower. So this would be example for salary employees. If you are salaried and you're making $50,000 a year, you are paid $50,000 per year no matter how many hours you work within the work week. So in this example here, the employee earns $44,000 per year and has a standard 40-hour work week. What is her hourly rate? 44,000 divided by 2,080 hours, because they're working 40 hours per week, times it by 52 weeks in the year. That employee hourly rate is $21.15 per hour. If the employee is $44,000 per year and has a standard 35.5-hour work week, what is her hourly rate? So same example, 44,000 divided by 37.5 multiplied by 52 weeks in the year. So it come out to 1,950 hours per year. That would be 22.56 per hour. Notice that the hourly rate is higher because of the shorter standard work week for this employee. All right, and remember also non-exempt salary workers are still subject to FLASA minimum wage provisions. Employees must ensure that the salary wage divided by the annual hours meets the minimum wage. That is very important that the employer keeps that in mind. The other item that is talked about in this chapter is commission-based pay, which is covered on page 91 in your book. Commission-based pay is compensation based on a percentage of sales revenue. Now, the employee could be classified, it may be exempt or non-exempt, but the employer must ensure that the commission-based employee receives at least the FLASA minimum wage. That is the rule by federal law. Outside sales personnel are exempt from the minimum wage. So an example would be is that Sally works as an inside sales rep in the company store and receives 5% commission for all sales that she makes. During the week, she makes 15 sales for a total value of $1,500. So $1,500 multiplied by 5%, she would earn $75. Based on her 40-hour work week, her hourly rate is $1.88 per hour. Now, the employer would be responsible for meeting the FLASA minimum wage requirements for the state that she works in because she is making less than the minimum wage. Now, Samantha works as an outside sales rep, and her sales this week of $2,000 has agreed to pay a commission percentage of 10%. She effectively has earned $5 per hour. So $2,000 times 10% equals $200 divided by a 40-hour work week. Her minimum wage is $5 per hour. Since she is an outside sales rep, she is exempt from the minimum wage regulations under FLASA. But keep in mind, the employer must classify her on their payroll as an outside sales rep in order to not meet the FLASA requirements for minimum wage. All right, commission pay is appropriate when the employee is materially involved in the sale of the product but does not participate in manufacturing the product. Some of the examples of commission-based occupations is retail sales personnel, automotive sales personnel, and marketing sales agents. Now, the other items that is talked about in the book, which is on page 93, is piece rate workers. Piece rate compensates employees for units that they manufacture and actions they perform. Now, this is the oldest pay methods, and they also must meet FLASA minimum wage requirements. These workers are mostly classified as non-exempt. Now, an example of this would be is that John is a piece worker for Nebraska who receives $15 per completed piece work. During the 40-hour work week, he completes 30 pieces. $15 multiplied by 30 is $450 per week that he would earn. His rate then is $450 divided by 40 hours is $11.25 per hour. He exceeds the FLASA minimum wage, so he would be paid based on the piece work. In this example here, you have Sarah. She completed 15 pieces at $225 divided by 40 hours. Her hourly rate is $5.63. She does not meet the minimum wage requirement in Nebraska, which is, remember, those wage requirements for each state is located on page 85 in your book. So the employer would have to examine Sarah's work and pay rates to ensure that she meets the Nebraska minimum wage requirements of $8 per hour to meet FLASA. All right, learning objective number 3, which starts on page 95 in your book. Now, this is calculation based on hours and